What's up? This is the College Investor Audio Show. We are so glad that you're here joining us today as we talk about this. Check this out. $1 trillion with a T dollars in CDs are maturing in 2025. This is nuts. So let's talk about that today. Before we do, I want to invite you to hit subscribe on this podcast so you're always up to date when we post new content, and we do all the time. You can also follow us all over social media. Just check us out at The College Investor. We'd love to get to know you better, walk along with you in your financial journey. And also at thecollegeinvestor.com, you can dive into any topic we talk about with the articles that you hear on the podcast. All right, let's check this out now. $1 trillion in CDs maturing this year. So CDs. What's a CD, by the way? It's a certificate of deposit. These are the low-risk savings vehicles offered by banks, credit unions, and a whole bunch of other financial institutions, where you can commit a certain amount of money for a specific period of time, and the issuing bank commits to paying a specified rate of interest. CDs generally have terms ranging from just a few months to several years. So, okay, how much is $1 trillion? Now that we know what CDs are, humans have a hard time kind of wrapping their minds around the concept of large numbers. I do. A common saying is that the difference between $1 million and $1 billion is about $1 billion. 1 million seconds is about 11 and a half days. 1 billion seconds is 1,000 million seconds, which is over 31 years. 1 trillion seconds is 1,000 billion, which is over 31,688 years. Hopefully these numbers kind of help put that into perspective, the sheer number of dollars that we're talking about here. All right, so here's the growing popularity of CDs. Let's talk about this and why this $1 trillion number matters. Yeah, CDs have been always helpful, a very helpful tool used by many savvy investors just kind of as a way to save for the future. But they've recently increased in popularity as interest rates have increased. When interest rates were lower, CDs just weren't as popular. It was like pennies. It's a joke. Since the rates you earn with a CD are usually tied to the federal funds interest rate set by our friends at the Federal Reserve. So, when the federal funds rate is low, CD rates also tend to be low. They kind of manipulate us, don't they? But as interest rates have gone up recently, CDs have become more popular. It's been quipped that a younger generation may think of CDs more as a certificate of deposit than as a compact disc. Isn't that something? My kids are asking, what's a CD? Man, that's just so weird. Anyway, CDs come with different dates of maturity, and as more money has flowed into CDs, we are now reaching a point where $1 trillion in CDs are actually maturing this year, 2025. With these CDs maturing, this money will be making its way back into the financial system, so it's important to be aware of what that means and how it's going to impact you. So, what happens when CDs mature? When these certificates of deposits mature, investors face choices about what to do with the money coming back. This could include reinvesting in new CDs, moving funds to just higher yield options, or just taking it and using it for other stuff. So deciding what to do with any money that you have in a CD that matures is going to depend on a number of different factors. Most crucially, any immediate need you have for that money and your overall financial goals. Mary Grace Roski, by the way, the Chief Operating Officer of CD Valet, a tool that allows users to compare top CD rates, encourages savers to shop around and a direct quote from her, CD rates vary widely in the current environment. Questions about economic policies from taxes to tariffs to inflation to immigration have financial institutions feeling a little bit uncertain about their pricing strategies, and as a result, CD rates today really run the gamut. Savers who shop will be rewarded with higher rates, especially by many community banks and credit unions. Longer-term CDs are also more attractive now, with the yield curve first flattening and steepening as long-term rates started rising in September 2024. End quote. Market implications of $1 trillion in maturing CDs. Let's take a look at this, dive into it. So the decisions that you make with any money in a maturing CD not only can affect your personal finances, but can contribute in part to the broader economy. While you might not think that the decisions that you make with your personal CDs might have broader macroeconomic effects, oh yeah, they can play a part in the larger economy. An influx of money from maturing CDs has the possibility to influence interest rates, bank liquidity, and market trends in 2025. As CDs mature, banks may have to compete to attract money from savvy consumers by offering incentives, including bank bonuses and higher interest rates. Alternatively, if consumers decide to move their money out of the banking industry to alternative investments, this could strain the liquidity at some banks, which might force them to adjust their lending practices. It's really too early to know how this transition might play out, but it's really worth keeping an eye on to see how it might impact various asset classes and how it might play out in the broader financial market. Now we move on to how to prepare for this maturity wave. As we enter 2025, one of the best things that you can do is just kind of review your overall financial goals. Making sure that you have a firm grasp on your overall financial strategy can help guide your investment decisions if you have a CD that is maturing in 2025. Consider whether your priority is liquidity, income, or long-term growth, and then align your strategy accordingly. If you do have a CD that is maturing in 2025, make sure to compare alternative investments such as high-yield savings accounts. You may find that HYSAs can give you returns similar to those of CDs without having to tie up your money for a set period of time. That increased liquidity can provide more flexibility, helping you to better reach your financial goals. Other investments like treasury bonds, stocks, diversified portfolios may be good options to consider too. Consult with a qualified financial advisor if you're not really sure about what the right move is for your specific situation. The bottom line, $1 trillion is a whole lot of money. And with that much money in maturing CDs hitting the market in 2025, it could represent a pivotal moment for both individual investors and the broader financial market. With such a significant amount of money re-entering the system, the choices made by millions of CD holders could affect interest rates, bank liquidity, investment trends, all that stuff. So for those of us who have maturing CDs, this is a unique opportunity to kind of reassess your financial priorities and explore alternatives that align with your goals. Whether you choose to reinvest it, pursue more flexible options, or just seek higher returns elsewhere, being proactive and informed will be key to navigating this transition. As the financial landscape evolves, smart decisions today can set the stage for greater stability and growth tomorrow. And that is our show for today. We hope it was helpful to you. If it was, share this podcast with some other people around you. It'd be greatly appreciated. You can also check us out on social media, ask us questions. We'd love to get to know you better and help you along in your journey, especially when you're trying to figure out, what do I do with this money I'm getting back in my maturing CD? We'd love to help you in that process. You can find more links, more resources right inside this article too, and many more at thecollegeinvestor.com. Thanks again for stopping by today, and we'll talk to you again real soon.